In today's video, I'm going to be giving a little bit of a market review on what happened last week. We're also going to have a look at economic optimism and why it might be failing right now. And of course, we've got some inflation concerns to consider. And on top of that, I'm also going to have a quick look at the big four banks in Australia. Hello and welcome to another acysecurities market update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. As always on a Monday, I do give a market review or a market recap of what's gone on in the week before, so we will be doing that. But to start off with, we're going to have a look at COVID-19. We have seen the infection rates rise even further over the weekend, with more than 3.5 million cases around the globe right about now. We've also seen that death toll rise, and we've also surpassed on recovery rates over 1 million. So that is certainly good news, but again, we're still looking for that R squared value and hoping that we can get recovery rates above infections on a daily basis. So again, as we look out for that in the near future, we'll have to make do and see if we can find other opportunities to be trading in the meantime. Now, when I always do these market reviews on a Monday, I always have a look at what's going on in the week before and what some of that high impact news is. So it should appear on your screen now for you to have a bit of a look and zoom in. I'd encourage you to have a bit of a read, look and see what some of the things are that I put in, and have a Google and see what it's really been about. But the big things to have a look at for the week have really been coming from the Fed, the ECB, and the and the RBA, and it's usually been revolving around stimulus packages and what they might be doing to try and support the economy. We've naturally also had a slew of pretty bad economic data that you could almost consider to be toxic. It is being consistent and it is continually going to occur in the near future. So we need to keep an eye on those sort of data figures, especially with this week being an NFP week. It's all the more paramount that we keep an eye on what's happening, especially on the unemployment side of things around the world. Now, the next thing to sort of move into today, I have a chart here on the SPX or the S&P 500, and it is really about the idea of optimism waning. Now, we saw last month that we've had nothing but growth on the S&P 500, a really big quick travel up to try and combat the big drop down of nearly 34%. But there is a lot of questions as to why that's happening and why it might be occurring now. It doesn't seem to make sense. There isn't, really much logic that goes behind it other than the fact that we've had some really big stimulus packages, the biggest ever seen, being dumped into the economy, which yes, would be helping those listed companies push their stock prices back up to where they were. But is it something that's going to be sustainable? And the issue with this that I'm seeing now is that whilst it has gone back up and people have been quite optimistic with lockdowns easing and all those sort of things, that really now there isn't a really good reason for it, and it is becoming evident. You only need to look at a couple of opinion pieces on Bloomberg or any other sort of news source, and you can see that people are actually starting to get concerned and worried about what is going to be happening in the near future. Now, the tally, if you actually put it down to it, you've got a couple of different things. The first one is that people are concerned about a second wave of infections. They're concerned about the corporate earnings, which have really not been that good, with a lot of companies deferring or even failing to give advice as to what they might be expecting in the next sort of 12 months. So that obviously makes people a little bit anxious. It makes them worried, especially if they've got stocks already with that sort of company or they've purchased into that, then that's also going to be a bit of a problem. We've had a consistently toxic economic data coming out. If the worst of the lot in my mind has really been the US unemployment claims, but around the globe, the numbers are not good, whether it be from a GDP standpoint, an employment standpoint, CPI, it really doesn't matter. Pretty much all economic data that we're getting from official sources are negative at the moment and are likely to continue. We've also had the US versus China sort of tensions, and also really the Western world. We've seen Europe, Australia, the US, and a couple of other smaller nations that are suffering from COVID-19, really wanting there to be an independent investigation, and it is not getting any easier for them. They are quite pushing for it. China is sort of pushing back, and there is a political tension that's sort of mounting around that. On top of that, we've also had political tensions between South Korea and North Korea rising, with just over the weekend, North Koreans taking fires over the DMZ zone at the South Koreans. So what's to happen next there is also another question that people have to have in their minds. From there, we've had the commodities dislocate with WTI oil. There's obviously a very big difference with what's going on in commodity channels versus futures markets, and of course in what we see in CFDs and currencies and stock markets. So there seems to be a bigger disconnect occurring almost on what feels like a daily basis. Add all this together and it doesn't look good. The last one, and this one really is a bit of a nail in the coffin for that optimism, actually comes from Warren Buffett. Now, Warren Buffett has traditionally been a very bullish kind of guy. He's always been one to say that you buy stocks to hold them, you never want to sell them, and he's also had this opinion of purchasing when everyone else is selling. And he's not wrong, but in this instance, he's gone against what he usually would do. And I think that's got a little bit to do with what was happening with stimulus and all that. I think he's based what's happened in 2008, thinking that there might have been a similarity occurring this time, but this time, obviously, the Fed and the rest of the world put in quantitative easing and pumped money into the economy very, very quickly, not giving him really enough time to be able to make some of the deals that he usually does or invest in certain places. So, but the interesting part that he has really had is a quote that I've taken from him in his recent Berkshire Hathaway's investor meetings, and that is, he said, a lot of uncertainty hangs over the market. So usually a man who was very bullish about purchasing stocks at times like this has said, maybe it's not quite right. And he's had to explain to investors why he's kept cash reserves as opposed to outright going and buying things. Now, there are a variety of economists out there at the moment who think there is another drop likely to come because we're still waiting on the economic data and the realization of all that. Put all this sort of stuff in combination with one another, it is looking like it is a south end move for us in the reality of things globally, in a global capacity for sure. Now, put on top of all of what I've just said before, and then now we need to consider the inflationary risk. There's been a lot of talk about the idea of potentially having deflation, but one of the other ones that's been talked about is the idea of hyperinflation. And it seems that economists and all sorts of other sort of people in that sort of spectrum have really been on at either end. They're either thinking, oh, we might get hyperinflation or we might get deflationary measure response. Now, if you're on the deflationary side, you're probably looking at stuff that's gone on in 2008 and the dot-com bubble and a variety of other economic impacts that we've had in the past. Now, if you're on the hyperinflation side of things, you're looking at stuff like World War I and World War II and what happened with government stimulus immediately after the end of the wars and what actually happened with inflation rates. Now, in both of these sort of situations, they're at obviously opposing ends. But the fact of the remains that it's kind of an economic, it's turning into an economic problem for the rest of the world, especially on the global scale. But when we actually look at what's been done and how much stimulus has been pumped into the economy, it's kind of like a wartime effort and the end of a wartime effort. So we have people on both sides of this inflationary argument saying, well, it could do this, but it could do this, which again breeds so much more uncertainty because you've got some specialists in their fields who don't know which real direction they're going to sit on that fence for it to be either inflationary or be going into hyperinflationary. Now, this chart that I've got behind me actually comes from the International Monetary Fund, and they're saying this is what our expectations are for 2021 and the inflation levels. Now, it does look horrible because it is all a red chart, but the numbers there and the scale at the top sort of balance that out a little bit. You know, we're looking at Australia and the US at being in between a 2 and 3% range for inflation. But naturally, you get some very dark ones over Africa and, of course, in South America, where we sort of see some nasty stuff in the 10% range, which is obviously not good. Obviously, these are just expectations by the IMF, and that may not stand to be the case. But something that is interesting is that we didn't see the real economic fallout, and we really didn't see the real inflationary damage until about a year or two after what's happened in the GFC. So whilst things were starting in 2007, all the damage was done in 2008. The results of that damage weren't really identified until later in 2009. So we do have to take into account that whilst we're seeing stuff now, it might be a year or two before we start seeing how bad it really gets. But that is yet to come. Now, the next piece I've got for you today is on the big four banks. Now, Australia has been known to have some really strong banking stocks coming out of Westpac, ANZ, Commonwealth Bank, and NAB. Now, the earnings season has not taken any sort of survivors or prisoners, and in this instance here, the banking ones that have been really, really big in Australia and been known to have actually survived the GFC with profit have not survived this one. We've seen Westpac have a drop of 70% on their profits. We've seen NAB and ANZ drop by 50% each, and they are all four are thinking about either deferring their dividend payments or potentially outright canning it all together for this year. They've all basically said they're going to be deferring it for the time being, but whenever you get someone say that they're thinking about deferring it, they're usually thinking about whether they're going to cancel it. So definitely something to consider. On the plus side, it might mean that banking stocks are a little bit cheaper out of Australia, so you might want to check out what they're doing and how much they're valued at right now, and see if you can find a really good valuable position perhaps in the next couple of months. But otherwise, it's something to definitely keep an eye on. It's obviously not good for the Australian economy either if your banking system, which is primarily makes up a large portion of your GDP, isn't operating at full capacity and or isn't being healthy. We've also heard that they're starting to sell off parts of the banks themselves. So CommSec has already made arrangements to be sold off from CommBank to Japan, I believe, from memory. And we've also seen that some other smaller factions of each of these banks might be being sold off, or the financial services that they provide might be being sold off in the near term to help recuperate some of those costs, or at least try and build up that stock price and the dividends again with cash. So yet to see, but let's keep an eye on it moving down ahead. Now, the news that we've got for you this week, I do have some bank holidays for you. The first one is that Japan has got a bank holiday for today, tomorrow, and Wednesday. So expect, if you are trading yen pairs, for them to possibly be a little bit quieter than normal, and that you might not get as much action if you are going to be trading them. Now, on Friday, we have bank holidays for France and the UK as well. So, but that's really, we're going to be looking at Friday for NFP anyway. So that either way, that's going to be a big day for news. Now, when it comes to the news that we've got ahead, you should be able to see them on your screen here right about now on what all the stuff is. But the ones that I've picked out for you this week that I think are likely to be our higher impact events are the economic forecast by the EU. Now, the Eurozone is obviously a much bigger area, and it is a tentative thing. So this could come out at any time today. So if you're trading euro, dollar, and any of the like, then make sure you are keeping an eye on what's going on. Now, we also have an RBA statement coming out and the cash rate on Tuesday. So that's something to watch for, especially considering Australia. I don't think they're likely to do anything. I think it's been too soon for them to really make any adjustments on what they're doing from a monetary policy point of view, but either way, it would be good to keep an eye just in case they do. We've also got New Zealand unemployment figures, which will be slightly interesting to see, but considering they can, putting this idea of exiting lockdowns, that may start to rise again, but who knows? It's too early to tell right now. We've also got US ADP unemployment. Now, that's on Wednesday night, very close to Thursday morning. That is going to be important because this week is NFP. And it's going to be the first NFP we've had that actually encompasses all of those really big jumps in unemployment claims, which went from 3.28 million to 6.6 to 6.6 to 5.25 to 4.5. So we have a very big number of unemployment claims that have come in, and it will be interesting to see what the unemployment rate moves to. And of course, what the unemployment situation looks like in the US. Now, we've also got Bank of England statements coming out. We have US unemployment, obviously, on Thursday, and then the big one of the week is going to be NFP for Friday. So make sure you are keeping an eye on your news calendars. Make sure you are keeping an eye on what's going on out there in the world as well. And I hope you have a great trading week coming up ahead. And if you'd like to get in contact with me about anything I've covered today, feel free to shoot me an email at talktoal@acy.com. And of course, like and subscribe to the video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.